Welcome back. Just focus on Hero MotoCorp. The stock has recovered a bit from the lows of the day. The conference call is currently underway where the management is saying that the EBITDA margins would have been 12% if the lockdown costs were to be added back. Their balance sheet is strong. They're sitting on cash flows of more than 1,000 crore as of Q1. They've gained 500 basis points market share in the domestic market in Q1, and there are very clear, visible signs of personal mobility market picking up. As we had highlighted in the morning that the earnings were weak, they were expected to be weak, but it wasn't as bad as what the street was anticipating. But the stock was an outperformer compared to its peers. If you look at it on a year-to-date basis, Hero MotoCorp is up close to about 13-14%, while peers like a Bajaj Auto or an Eicher Motor are actually down 5 to 6%. So there was that outperformance, compared to peers, which perhaps got corrected. But just keep your eye on the management commentary on your screen. But let's talk about the market technicals. We're now joined by Sanjeev Patni, the founder and CEO of SilverArch Investment. He joins us now. Sanjeev, thanks so much for joining in. I was looking at your returns and you've generated some very smart returns, 19% in the first quarter of this calendar year, 5 to 6% in the second quarter of this calendar year. What is the strategy to generate alpha for the third as well as the fourth quarter?
Overall, we are quite bullish actually on the market. So we expect the markets to continue to do well. What we have done is we have after the coronavirus hit in March, we have actually re-strategized and we have reworked the entire portfolio. We got more into sectors which we thought were not really impacted by the coronavirus, and that's what has benefited us. So that was the reason for the performance after the March decline. And in the third and fourth quarter, we continue to be similarly positioned. We think these are the sectors which will continue to do well. But on the whole, we continue with our strategy.
I was just looking at your split between large and mid caps. 70% of your portfolio is in large caps, while the balance is in mid and small caps. Now, considering large caps have run up more than the broader markets, and there is still some valuation headroom when you look at individual players in the mid cap space, would you look to alter this split to generate extra returns?
Not for the time being, actually. We think that the large caps would continue to do well going forward as well. So this is the split that we would continue for the time being.
Sanjeev, where are you? I mean, if you can be a little more specific in terms of where are you seeing opportunities? I mean, the market has come a long way, hasn't it? But in terms of subsectors, where are you really finding opportunities now?
See, Prashant, what has happened is market has basically so the impact of the lockdown was actually a short-term impact. There is at the maximum 2-quarter impact which was there because of the lockdown. On the other hand, to combat the lockdown, the central government, the central banks, and all of those have induced stimulus as well as brought down interest rates. Interest rates are a long-term benefit for the market. So that's what is playing out, and because of that, the discount factor for valuations actually has come down. So that is the reason we think that the market should continue to do well. Now, on the other hand, you have the short-term impact which will play out. So there is a divergence between sectors. There are some sectors which are impacted much more in the short term, and there are some sectors which are impacted much less. So we are actually positioned in the sectors which are either not impacted or impacted much less. And for the time being, we think that this kind of positioning should continue in the market. When we see the real signs of either the impact of coronavirus coming down or economy picking up much more than what we are expecting, that's when we are going to be going into other sectors. So at least for the next couple of quarters, we think that we are positioned correctly. And the top holdings, the top sectors that we have right now, which are pharma, FMCG, NBFC, some of the NBFCs which are productized NBFCs primarily. So we would continue to be overweight in some of those, and we'll continue to be underweight in, for example, banks for some more time, and even mid-cap, small caps.
Sanjeev, it's a pleasure. Thank you very much for joining us. Good speaking with you. Thanks indeed. We will take a very quick break here. Up next, we get talking about the unlock theme, but we get a perspective from one of the largest hotel chains in the country. Indian Hotels Management will be with us. We'll be speaking with Rohit Khosla of Indian Hotels on what kind of occupancy are they seeing, interest coming back, and of course the challenges they face as well. The stock, by the way, had a big 10% plus move yesterday. It's at about 96 right now, flat. We are back with the management.